Welcome to this explainer. Today, we're going to completely demystify the process of finding the absolute perfect online brokerage to kickstart your wealth building journey. Look, if you've been sitting on the sidelines because the financial world feels like it's speaking a totally different language, you are in exactly the right place. We're going to break down the complexities, dig into the hard data, and find the exact platform that fits your unique personality.
So you're ready to start investing, but honestly, you're probably feeling a little lost in a sea of options. Well, let's fix that. Today, we're acting as your personal investing matchmaker, curing that dreaded analysis paralysis once and for all. And we aren't just taking wild guesses here. We're relying on hard, verified data and rigorous testing from Forbes Advisor to match you with a brokerage that fits your exact needs. Because the truth is, the best broker for your best friend might actually be completely wrong for you.
Here's our roadmap for today's explainer. First, how we ranked the brokers. Second, the top all-around picks. Third, best for education and community. Fourth, top picks for long-term planning. Fifth, casual investing and cash boosts. And finally, number 6, making your final choice.
Okay, let's jump right into part 1, how we ranked the brokers.
Before we match you with a broker, you kind of need to know how these platforms were judged, right? Well, Forbes analyzed 35 different financial institutions across more than 55 distinct data points. They dug into everything from sneaky fees to customer service, all the way to app reliability. That level of extreme thoroughness means that when a platform gets recommended for a beginner, it has truly earned its spot through objective, rigorous testing.
And when you look at the weighting methodology, it actually makes a lot of sense. Notice how the really beginner-friendly factors, like customer satisfaction, low trading costs, platform features, and advisory services, make up the largest slices of the pie at 15% each. They essentially prioritized what actually matters when you're just starting out, which is keeping your hard-earned money in your pocket and making sure the platform is, actually usable.
Moving right along to section 2, the top all-around picks. Meet our best overall winner, coming in hot with a perfect 5.0 star rating, Charles Schwab. Schwab is a giant, and they offer a really user-friendly platform with this fantastic starter kit that literally hands you fractional shares of the top 5 S&P 500 companies just to get you going. It's a sweet deal, but there's a really interesting contrast here. That incredibly beginner-friendly perk is paired with some high-end hurdles. They don't have a high-yield cash product, and if you eventually decide you want their personalized one-on-one wealth advising, you'll need a whopping $500,000 just to get through the door. Still, for a self-directed beginner, the zero minimums and a massive educational library are pretty tough to beat.
Our next all-rounder is Merrill Edge. Now, if you're the kind of person who values ultimate convenience, like you want your everyday checking, savings, and your brand new investing account all living happily under one roof, Merrill Edge is a fantastic match, especially if you already bank with Bank of America. It's incredibly seamless. However, you are making a distinct trade-off. You'll have to sacrifice the ability to buy fractional shares entirely, and you won't find any spot crypto trading here either. It's definitely a more traditional, highly integrated choice.
Let's pivot to section 3. Best for education and community.
First up in this category is interactive brokers, specifically their IBKR Lite platform. If you are a total knowledge sponge, this one is for you. They offer just unparalleled educational resources through the IBKR campus. We're talking full-blown trading courses, webinars, deep market analysis, the whole shebang. But here's the catch. The interface has a notoriously steep learning curve. It's super powerful, giving you access to fractional shares on over 10,000 stocks, starting at just $1. But honestly, it might feel a little overwhelming the first time you log in. On the flip side, we have Webull, earning 4.5 stars. This is our top pick if you're looking for a social community. They actually feature a unique in-app community where you can connect with and learn from other like-minded investors, so it's highly interactive. They even have this amazing paper trading tool, which basically lets you practice buying and selling with virtual money before you ever risk a dime of your own. Pretty cool, right? Just keep in mind, traditional mutual funds are entirely absent from Webull. All right, on to section 4, top picks for long-term planning.
Let's talk about Fidelity. They scored 4.3 stars and are just an absolute giant when it comes to long-term investing. They offer an incredible array of industry-leading zero-expense ratio index funds. And in plain English, that simply means more of your money actually stays invested over the decades instead of being eaten up by fees. They also boast fantastic retirement planning and tracking tools. Now, some users do find their mobile app to be a bit clunky and maybe a little dated compared to the flashy new startups, but for serious long-term wealth building, it's an absolute powerhouse.
Sticking with our long-term theme, if you're a big fan of mutual funds, E-Trade is practically unrivaled. They give you access to nearly 6,000 mostly commission-free mutual fund options. On the other hand, TIAA might be your match if your long-term plan involves eventually handing the reins over to a real human advisor. TIAA offers personalized financial advice starting at $100,000 in investments. Now, I know that sounds like a lot, but it's actually significantly lower than the massive minimums demanded by a lot of other traditional brokerages.
And hey, we really can't talk about retirement without bringing up T. Rowe Price. But there is a very specific number you need to be aware of. $2,500. That is the minimum initial investment required just to open an account with them. So if you're a beginner wanting to start out by just dipping your toes in the water with 50 or $100, that minimum is a massive hurdle. In that case, you definitely want to look back at platforms like Schwab or Fidelity, where the minimum is literally zero.
Up next, Section 5, Casual Investing and Cash Boosts.
Enter Robinhood. Now, Robinhood completely revolutionized casual investing with a sleek, highly gamified app that seriously makes buying a stock as easy as ordering a coffee from your phone. It is incredibly user-friendly, especially for absolute beginners. But the major catch, and this is a big one for your overall long-term financial health, is their highly restricted menu. You can't buy mutual funds, there are no fixed income products like bonds, and you can't buy international stocks. It's really built for casual, quick trading, not comprehensive, diversified portfolio building.
Betterment takes a totally different approach to making investing easy. They act as your automated robo-advisor. Basically, you answer a few quick questions about your goals, and their software builds and manages a customized portfolio of ETFs for you. Plus, their cash reserve account offers a highly competitive yield on any uninvested cash you have sitting around. This is absolutely perfect for that set-it-and-forget-it personality type. Just a heads up, though, if you ever decide you want professional human advice through them, the fees jump up considerably.
And finally, Section 6, Making Your Final Choice.
Let's put these fractional share minimums head-to-head, because fractional shares are arguably the greatest invention for beginner investors in the last decade. It means you don't need $300 to buy one single share of an expensive tech company. You can buy a tiny slice of that stock with whatever is in your pocket today. Breaking down the data, you can see how Fidelity and Robinhood really lead the pack here, allowing you to start investing in both stocks and ETFs with just a single solitary dollar. Schwab allows fractional stocks, but not ETFs, and they require a $5 minimum.
Now, what if you realize during this explainer that you'd rather have an algorithm do the heavy lifting and manage your portfolio for you? Looking at the robo-advisory options, there are some stark differences in the entry barriers. Fidelity Go requires just $10 to start, and they charge zero management fees until your balance hits $25,000. Betterment has a $0 minimum, but they do charge a small percentage fee right out of the gate. And Schwab? Well, they offer a zero-fee robo-advisor, but they demand a massive $5,000 minimum deposit just to turn the feature on. So to summarize what you should absolutely take away from this explainer today, we've put together a simple checklist. First things first. Be honest with yourself and identify your investor persona. Are you a social learner, a long-term planner, or a casual app user? Second, ruthlessly seek out platforms with $0 account minimums and zero commission fees on stock and ETF trades. Third, prioritize platforms that offer those fractional shares so you can start right now regardless of your budget. And finally, weigh those shiny pros against what would be a personal deal breaker for you.
We've cut through the noise, analyzed the hard data from Forbes, and matched up the top brokers to distinct investor personas. The tools to build real wealth have literally never been more accessible, and the barriers to entry have never been lower. So the only question left for you is, which platform are you going to trust today to start building your financial future?